Hi everybody and welcome to episode 6 of Mrs Mummypenny Talks with Ridley Writes. Thank you for joining us back again. Very excited to have you here, either listening or watching. Have to admit, more people listen than watch. Not that many people watch, but got to put it out there on both channels. This week we are going to be talking about a subject that's very close to my heart because of what I do for a living with Mrs Mummypenny. But we are going to be talking about the key financial things, products, services that you need to think about as a woman. And it's going to be quite an interesting conversation because Beck is not as far forward on that journey as one would hope. Does that put it politely?
Yes, yeah, no, that's very true. That is very true. And it's interesting. I don't know if we want to dive straight into it, but I have some theories on why I'm not quite so far forward, which I can share with you as well.
Yeah, well, I think that's what we should start with is just doing a little bit of a check-in before we launch into the content.
Yes, let's do that.
So, what's the most exciting thing you've done in the past week?
Silence. What's the most exciting thing I've done? Moved the house around. That's not really exciting. That shows you where my life is right now. I mean,
the most is not the most exciting thing. Dave and his.
Oh yes, of course, yes. So my husband Dave was standing as councillor for the Green Party, and he came 5th out of 8 potential councillors, which, given that this is his first time ever running for this kind of thing, and he was also what's called a non-campaigning candidate. So it's where you make sure that your party has a candidate available for people to vote for, but you don't let them go out and campaign.
Oh right.
Yes.
So he wasn't allowed to go knocking on people's doors.
No, and it's kind of part of it's two things. It's one, so that they can invest all the energies of all the people that are interested in the party in areas that they are more likely to win, and also it's their way of sussing you out a bit to see whether you're a good candidate potential. So hopefully, because he did so well this time, hopefully that shows that this area is interested in green issues and the Green Party. So potentially next time he will be allowed to campaign, and then God help everybody. What about you? What's been the exciting activity for you this week?
So I was gonna share. I've got several mentor type people in my life, you being one of them. But one of the people who I speak to, it's not a regular thing. We just have like a Zoom catch up every couple of months or when we're in the same town, because this guy Pete Matthew lives in Penzance where we're from, so whenever I'm home we try to catch up. But we had a chat last Friday, and so Pete Matthew, for those listening who haven't heard of him, he's the founder of Meaningful Money, and he which is this huge podcast and YouTube channel. So the podcast, I reckon, has been going for 10 years, and he just has the most down to earth, just really lovely style of explaining things in a really sort of simple way. He's got a book, he's got an academy thing you can join. He's got this amazing Facebook group where you can just go and ask any question and you'll get decent answers back, and no sort of judgment as well, which is quite nice. So we have these sort of co-mentor chats, and but I want to say the thing that really stands out, which sort of bowled me over a little bit, which was a really simple piece of advice he said to me at the end of it, was because I was talking about things I was worried about or where I thought the business was going and could I keep up with it. And he was like, Lynn, just focus on your audience and just produce stuff that they want. Don't worry about what X is doing on Instagram or what Y is doing on YouTube.
Yeah,
it was such a simple thing, and Yeah, because we were talking for like what he's going to be doing for his audience and talking about what I'm doing for my audience. So yeah, it was just a really simple, nice piece of advice where I think you just need to be almost put back in your place a little bit to just, yeah, focus on the right things.
Can I share a piece of advice that seems to be popping up in my week a lot at the moment, which is about everything you say yes to means that you're saying no to something else. It's about the opportunity cost every time you say yes to things, which is, as you know, is a big one for me because I say yes to too many things that I probably shouldn't. But it's around the same thing of really focusing down on what it is that you really want to do. Yes, there are a million things we could be doing, but yeah, the things that are essential to us and our audiences are the ones we should be most focused on.
Absolutely. So yeah, that was good. A highlight of last week. Right. So yeah, let's get to it. So the financial things that every woman should think about or consider. So let's start then with maybe mindset and why. So women and money is a very contentious, difficult subject because so women tend to be responsible for like the day-to-day finances, you know, like the food shopping and maybe the day-to-day bills, but very rarely are they involved in, particularly in a partnership, and very rarely are they involved in the long-term financial stuff. And that subsequently means that women are totally underrated when it comes to investing, pensions, even like long-term savings. And that's not right for a start, because unfortunately a lot of marriages, partnerships end up breaking down. 42% of marriages end up in divorce. And then you've just got this whole like unraveling of complex financial products that needs to be split 50-50, or do they end up being split 50-50, or, you know, whatever is agreed. So it's much better to get everything, or as much as you can, in your own name, rather than, oh, it's okay, we're going to be together forever and that person's always going to be giving me, you know, half of their 500 grand pension. Not necessarily so. So yeah.
I looked up a few stats on this actually, and but they say that there's some research done a couple of years ago that says 7 out of 10 millennial women say they've never been taught how to manage money versus 4 out of 10 men, and that 63% of millennial women admit to deferring to their male partner regarding long-term financial decisions. And 85% of them feel that male partners know more about investing than they do. So there's a real sense that it's not an area that women feel comfortable in, actually. But then there's, you know, there's also some, I guess, kind of cultural things, because I hadn't properly realised this, and I do need to investigate this a little bit further because it seems it seems really extreme. But apparently as recently as 1971, women in the UK were not allowed to have a bank account. So that sort of sense of, wow. Yeah, that sense of not having ownership or rights to money, and I mean, you know, very much that sense of money as a feminist issue is a really big one, and you know, a lot of what was enshrined in marriage from kind of the industrialization onwards was very much this idea of woman as property, and through marriage you lost lots of rights that you might even have had as a single woman. So yeah, I think there's a lot of baggage, cultural baggage, that we may not even be all that aware that we're carrying as well.
Yeah, absolutely. And fear. I think there's a lot of fear and shame, because it's like, it's what's the right word to use? It's a taboo subject to talk about money, isn't it? Like, people would never dream of sharing with their friends how much they earn. And sometimes
and I think that's worth it. That's worse in the UK as well, apparently. I think the British are particularly reticent about talking about money.
Yeah. Like in America, they've got no problems of they sharing how much they earn, and it's interesting. And I've been very open about you can pick pieces out of my website as to how much. I don't think I've ever actually come out and said I earn X £1,000 a year. Well, for a start, it changes every year, and depends what's going on that year, and it changes every month, like the inevitability of self-employed world. But certainly when my children ask me, I always say to them, they ask me all the time questions about money and how much I earn, and I'm just completely open with them and tell them. But I just think, we need to talk about money in a positive way, not being show off about it, but just being I find it easier to talk about maybe the debt side of money than the income building side of money. And interestingly, I've gone through this shift personally. So in the last few years, I've gone from, so if you look at I track my net wealth. So that's adding all your debts and excluding your mortgage. That's adding all your investments, pensions, debts all together to see what you're worth. And if we look back maybe like to 4 years ago, so I was 16 grand in debt. I say it was actually a we, but
joint thing, yeah.
Hey ho, that didn't it wasn't a joint payoff of that debt. And now I've got to the point where I've completely reversed that 16,000, where almost opposite, I've got that much sat in my emergency cash savings. Plus I've put all this on my website, maybe about 20 grand into my pension. I've added money into my investment. So I've reversed it from debt into wealth.
Amazing, which is brilliant.
Yeah, no, it is amazing. When you actually look at it like that, it's pretty like doing your net wealth calculation. That's another very American thing, and a lot of American writers are often showing off about how much they've got. But yeah, it's quite a nice expression of your financial worth. Yeah. I think we should start with, let's start with you and your situation, how you feel about money, and almost like your money mindset and where you are and where you want to be.
Yeah, definitely. So I think there's a couple of things here. One I'd like to say is that I'm probably in a reverse place as to where I was maybe 15 years ago. So when I was working for Thomson Reuters, I had a really good company pension. I think I put extra money into that company pension. I was the primary breadwinner in the relationship that I was in, and was responsible for all the finances. And I also had shares. I had shares in Thomson Reuters, and I monitored them and knew how they were performing. So I went from having, and I had a degree of savings as well, because I would get paid annual bonuses, and so I would put all my annual bonuses into a savings account. So I had a chunk of money, which came in very helpful, came in very handy when I left and sort of had a year's sabbatical as such. So that's where I was. And where I am now is quite a different place, in that I have, apart from my tax account, being a self-employed person, I don't have a separate savings account. I don't have any savings. I do own a house with my husband, so there's an asset there, and I have, I think, somewhere in the region now of 3 company pensions that are not combined, and I do not currently have my own private pension that I am paying into, so very much missing lots of those bits and pieces. And knowing that we were going to talk about this today, I was reflecting on this situation, And a couple of things really came to me. I think there's a mixture of kind of personal and political here. So the personal is that my parents very much lived day to day, month to month. They lived very much on the edge financially, and they didn't want me to, but and they didn't really want to themselves either. It was sort of circumstances that kept repeating themselves, but it sort of meant that they died and left nothing. They had nothing left. There was nothing to give. Yeah. They also died before they reached pensionable age. Mm-hmm. They didn't live a bad life. They lived a really good life. They went on holiday. They did all the things that they needed to. And I think after the death of my mum, and when I also went to the point of completely changing the life I was living, from being a very responsible corporate girl to being somebody more free-spirited, I think I took with me that sense of almost nihilism, I suppose. There is no future, so let's just live for today. And very much when I moved to Bristol, when I think about it, I moved not worrying at all about money, to the point that I did things that I would never have done just 3 years before. So I was buying weekly shopping on my MasterCard, not knowing how I was going to pay that back. I did all sorts of things like that I now look back on with horror and think, oh my God, why was I doing that? How was I doing that? So I think there's a personal thing, which is a reaction to being orphaned. Actually, I think I'd just say it as plainly as that. It was a reaction to death and to the lives that my parents had led, and a support in some sense of the life they'd led. And then the second thing is political, which is that I do have a lot of concerns about, for me, wealth can only exist at the cost of somebody else being impoverished and probably enslaved in some way. I think there's a real inequality around the distribution of wealth, and my hoarding of money would be part and parcel of a system that is unequal and unfair. So there we go. Those are two things as to why I'm not doing some of the things that I should be doing financially.
Wow. Oh, I don't really know where to start with that. I totally get the live for the moment thing, because I've been there and done it and lived 1 month to the next when I was in that period of high debt 4 years ago. That's not the first time I've been in that position of being in high levels of debt, but I don't know. I've got this like inner belief, this self-belief, and this is an interesting conversation I've had with a very different free-spirited person so she's a yoga teacher, and I wrote a piece a few years ago on a few women and how they were preparing for their retirement. She was like, I have no pension. Yeah, I've got a house, but like money just flows. When you need it, it will come. And it's always, that's an expression that's always sat true with me, that money will, if you can change your mindset to this position of, right, I need some money to flow to me, you will make the right decisions about life that will encourage that money to flow to you. Mm-hmm. It's not just putting it out there to the universe and, letting the magic happen, because you're actually taking action yourself. I know it's sometimes this week, we've had this discussion many a time, but I've had a couple of weeks where I haven't had that much work coming in, and that always stresses me out. It's the nature of self-employed work, right? It just goes up and down. So I was stressing out about it this week, and I was chatting to somebody about, I need to get the right crystals beside me, like citrine crystals, and I changed my necklace to wear. I'm completely digressing here. Changed my necklace to put my citrine pendant on, which is what you got me. And like the next day, like I was commissioned to do some work. So Sometimes the universe does work in strange ways. But yeah, getting back to the point of living for the moment, I think living for the moment is a very hedonistic way to live, and it's exciting, but it's not sustainable, because you will get to a point where you are in too much debt. You can't maintain the minimum balances even on your credit cards and the loans.
So can I just say right now, I don't have any debt.
Yeah.
Just to check, that was one part of the story.
You're not in that hedonistic sort of.
No, I have been there, but I did get myself out of it. By selling the shares was one of the ways of doing it, and also the PPI thing came through for me as well.
Oh yeah, you had a PPI.
So I ended up in a money flow situation. Like, it was one of those things, I needed money, and money appeared.
And it's strange. That does happen sometimes, but particularly because of the business I run and the conversations I'm having every day, life is about balance. We know life is about balance. Even like my yoga friend would absolutely say that. And there has to be a balance of living for the moment and putting money aside for the future. So that's sort of the balanced life point that I've got to is, absolutely, I'm going to have nice holidays, and I'm going to go out eating nice food and see my friends and all the rest of it, which costs a lot of money. But I am also putting money aside for my future as well. And then there's likewise with you, I didn't inherit very much money when my parents died. There was bizarrely, when I was in a terrible debt situation about 10 years ago, some inheritance money actually came through, even though it was 15 years after they died, from my stepmom. So that paid off. That's so sad. Like, I got a check for like 20 grand through in the post. And my debt at that point was £19,000. So all my parents' inheritance went towards was paying off a credit card. But there you go. It was paid off. I want to leave some money for my children. I just don't want them to be in that position where we never know what's going to happen. I just wouldn't want my kids to not have any money like I didn't have when my parents died. Because most people, when their parents die, they inherit a chunk of money, and it is quite galling that I didn't get very much. Yeah, you go through that incredible pain, and there's not even a financial compensation for it. Anyway, there's a whole nother issue there. But we're completely digressing with our conversation here, but it's good.
Yeah. We might have to do this as a two-parter, I don't know.
Yeah. So I think what we should, for a practical discussion, I want to talk about 4 sort of financial things, and they sort of start with the debt side, and they move all the way forward to when you're in a nice rosy position with savings and investments. So yeah, firstly, I want to talk about debt. Secondly, I want to talk about having an emergency fund, aka the fuck off fund, in place. I also want to talk about pensions and investments, and I also want to talk about protection, so insurance, life insurance, protecting your income and wills and stuff, because that's an important sort of thing to put at the end of it. But I think if you're just starting on your financial journey, I think before you even start to worry about putting money aside for the future, you need to almost get your current financial affairs in order. And that, luckily or not luckily, situationally for you, you don't have any debt. I have a car loan, which is just about to be paid off. So that will mean, for the first time, I've been credit card debt free for 2 years, but paying off this car loan will mean I'll apart from mortgage, I'll be completely debt free for the first time ever.
Amazing.
But yeah, it's it's looking at your current financial situation and do you have any debt? Can you manage your debt? And just sort of getting into your head, because this is something that I always just normalized in my life, that debt was normal. Like everyone's got credit cards and it's totally fine to have credit cards, which, yeah, everybody does. A lot of people do have credit cards and credit card debt, but it's not necessarily fine to have that credit card debt because it's still money that isn't yours. You're in effect borrowing from your future self. And I can't, the feeling of being debt free, not having that credit card payment going out every month is incredible. It's extra money you've got to yourself each month, but it's just that release of that, almost it's the mental health strain of having that debt just always there. So I think if you've got debt, particularly if it's interest charging debts like credit cards, the average interest rate is probably around 20%. That's costing you a lot. So do what you can to pay off that debt and get to a debt-free position. There's so much content on my website to give you guidance on how to pay off that debt. There's a whole debt section which has got all the sort of key documents. I've got like an 8 step-by-step program to get rid of debt.
To a quick question though, is there truth in the fact that it's important to have
hang on, we've got that robot noise again.
Sorry,
talk again. No, you've gone silent now. Oh,
better?
Yeah, we're back.
Yeah. Okay. Is there truth in the fact that you need to have a like having credit, some credit is good, so having a credit card and using it regularly but paying it off regularly? So I heard somewhere that that's quite good for your overall credit rating. If you do a week's shop on it once a month and pay that off every month, that's actually a really healthy and useful thing to do from a financial point of view. Is that true?
Yeah, no, absolutely, that's true. I have a credit card that I put spending on and pay off in full each month, because it shows to all potential lenders that you are responsible and can make a consistent payment each month.
Right.
So your credit rating, very important financial tool, needs to be as high as possible for when you get to points like applying for mortgages, but even getting mobile phone contracts and energy contracts as well. They're all linked to your credit rating, and you will get better rates and deals the better your credit rating is.
Different conversation, but this is part of the challenge in the industry, isn't it? Like, the worse situation you're in financially, the worse your credit rating, the worse deal you're going to get given, which is shocking. But anyway, we move on.
No, it's it's horrendous. So I just can't. Getting yourself out of debt is just an absolute. It will change your life. It really will change your life. You won't be worrying so much about money. And I know it's hard. You have to take, sometimes you have to take a really, you have to change your life completely. Like I hated doing it when I was paying off the debt, but I did things like having no spend months. I cancelled my social life. I missed out on things with friends. I missed out on going to New York with like my best friends for our 40th birthday because I just couldn't afford it. So it's make a change to your life and get rid of that debt, and you'll be in a much better place. And then you can move on to the next stages, which are more sort of positive accumulation of money. So the emergency fund, this is the stage you're at. You need to start building this emergency fund, and it is what it says on the tin. It's money for, as we all know, things that happen that are emergencies that are going to cost you money. It's not for holidays, buying some clothes, going eating out. It's for things like, oh my gosh, the car's just broken down, I need to get it fixed. ooh, you need a
So,
new washing machine, or
yes, I mean, there's an element of there's you know, I'm talking very personally about my personal debt here, rather than you know, from a household point of view, we do have that. So I think the other thing to throw in there is that the difference, and this will be relevant to many women, the difference now to where I was, say, 15 years ago, is that as a mother of two and self-employed, I work reduced hours, and so my salary is considerably lower than it was. And in our household, I am the second income, so the amount of income I have is quite is lower than my husband's, and therefore, in terms of not having an emergency fund, I tend to put most of my money into our joint account. And well, so it goes to the joint account, it goes to my tax account, and then there's a bit left for me to spend. So the pot available to start building up an emergency fund is quite a small pot for me personally.
yeah, I'd just plead with you to siphon some of that off into
No, I agree.
name.
I'm just, what I guess what I'm trying to do is highlight the fact that I don't imagine I'm that dissimilar to quite a lot of women, particularly with young children.
Yeah, no, totally. But then you could maybe get your husband to put a little bit more into the joint account, so you can put a little bit less in. It's having, the importance here is, I think, it's having stuff in your own name, because the real purpose of an emergency fund, so practicalities, size wise, it should be around 3 to 6 months worth of your essential expenses. But inevitably, what that fund can be used for is real life emergencies, like if you lose your income completely, if you get ill, if something happens to your relationship where you need to escape it. It's for real big emergencies. And I have had times where I've had to raise that emergency fund, so it's absolutely been an essential for me. And I remember we've talked about this before because it's in my book, but I siphoned money off when I was in a relationship a very long time ago. So a relationship that needed to end when I was in my 20s, late 20s. It was an imbalanced financial relationship. I think he earned quite a bit of money, I didn't earn so much, and I siphoned money off secretly into an account, and it meant that when the time came to leave, I had 10 grand or whatever it was there to cover my arse when I needed to leave. Not that there was nothing bad about the relationship, it just needed to end. I should point that out. But a lot of women are in that situation where they do need to get out of a relationship, and financially they have nothing set aside, and that's one of the big blockers, isn't it? Where if you're maybe in an abusive relationship but you can't get out because you don't have any money, like that needs to be in place. So please women, set up that emergency fund, and it needs to just sit in a cash account. I'd put it into a separate bank to the one you actually use on a day-to-day basis, because that it's sort of out of reach then.
Mm-hmm.
So yeah,
let's say you don't have very much money available to put into this kind of thing. It's worth doing even like £5, 20 a month, something like that? That's what you'd say?
Yeah, absolutely. Like the odd bit of money, just it builds up over time. I've got a really great tool that it's almost like you save without you even noticing. I've got this app called Plum, where so it's using open banking. They connect to your bank account and they do a bit of like clever analysis of your bank account, see if you're spending well that week, or if you've got a high balance or a low balance, and then they save some money automatically for you. Now I've been doing that. I think I've been doing it for coming up to a year. Mm-hmm. I've never done any manual savings into it. It's all just this auto. It's like a robot that just pushes money aside, and I've got like £1,000.
Amazing.
Aside there. I mean, that's and it just happens without you noticing. So Yeah, and it's safe. It's money I think it's held with Barclays, so it's all like protected as well. So yeah, that's emergency fund. And then investments and pensions. So once you've got enough money like stashed away into your emergency fund, then if you've got excess money on top of that, then you can start thinking about putting money aside for the medium and long term. So investments can be medium term or long term. So this would be maybe opening up in the simplest form a stocks and shares ISA, which it really is the easiest thing in the world to set up these accounts. There's companies like Vanguard and Fidelity that make the process so easy. You can put, and there's other companies where you can even put like £10 a month into these investments. But the thing about investing, so you're investing in a fund of lots of different shares together. I like to choose like green funds that don't invest in fossil fuel companies, so you can choose green funds if you want, and this investments can go up as well as down. I have to protect what I'm saying here, but you are more likely to make better returns for investment than cash. Like cash at the moment, I think I get 0.4% interest on my emergency cash savings, where my investments, I mean, it's been a strange year for investments anyway. They're going up and down all over the place, very volatile at the moment, but I've made something like 15% return on money in the past year. Now that is absolutely not guaranteed for the future, and your money can go down as well as up, but yeah, I certainly have some money put aside for investment. So that's like for the medium term. It shouldn't be money that you're wanting to get at straight away. So maybe it's for like 5 years, 10 years down the line. And then you've got your pensions, where hopefully if you're employed, you are paying into your pension. It's not an opt-in type of thing. Like it's a opt-out, and it's very difficult to opt out. So most people will be paying money to a pension. It's free money, so you really should be paying into it, because the government gives a tax benefit for all the money you put in. So you're getting a nice 20%.
They do that on your private pension as well, apparently. I was just reading before I came on here. So it's worth setting up a private pension for that reason as well.
Yes.
Every £8 you put in, the government will put 20 in for you. So
yes, exactly. It doesn't matter how you're set up, like sort of legally wise, for whether you're self-employed like you are, or I'm a limited company. There's different tax benefits, but yeah, you get a chunk of money back again. Unfortunately, as a self-employed person, you don't get the employer's contribution. That's the big winner of when you're employed and have a pension. Your employer has to put in a chunk as well as you. So you are really, if you're not part of your pension scheme at work, you really are throwing away a lot of free money. But the problem with a pension is that you can't access it for a while. Now, it all changed for me after turning 40, and I suddenly, the impending age of retirement, when you can access that private pension money. For us, we won't be able to access it until the age of 57. So they're changing the rules from 2028. They're bumping the age up from 55 to 57. But that's not that far in the future, is it?
I know, and I appreciate that all of this is about planning also for the worst case scenario, but I sort of I wouldn't anticipate myself being retired at 55 or 57 or 60 or 65. So my Reuters pension you can't access till you're 62, and that already feels early to me. So yeah,
but it would so you've got a few pensions dotted over. Yeah. It might be worth
hit list to consolidate them all, put them all in one
place. I don't know about I mean, you'd have to speak to somebody about your Thomson's Reuters pension, because if you can't access that till you're 62, that sounds really strange. I don't understand why you can't access that till a bit later.
It's just part of the policy that we all signed.
Yeah.
But yeah. And it was interesting because it changed in the period of time that I was working at Reuters, because there was always this thing that people worked there. When I very first started there as an analyst, people worked there for like 3 years. And after 3 years, you could get a payout from your pension, and you could get all of the money that you'd put in plus all of the money they'd put in. And people went on like, they went traveling basically. So they'd work there for 3 years and then collect the pension pot. Unfortunately, it changed in the meantime between that story, which may have been a story, to be fair, but people did go traveling, so I think there was some truth in it. And when I left, because I was going to do another degree when I got to Bristol, and I was going to pay for it using my wife's pension, which when I then called, they just went, yeah, no, you can transfer it. You could, I can move it into another, like I can move that money into another pension, but I couldn't access it to just go to drama school. That wasn't allowed.
I think I actually did the same with my Tesco pension. So I left Tesco's when I was 27, 28. And I'm sure I just pulled all that money out and spent it, which, it's pretty... Looking back now, that was not a clever financial decision. But hey ho. So yeah, if you have, now lots of us have pensions in lots of different places. I certainly did have, Beck has. So yeah, there's some clever people around now, namely Pensionbee. Full disclosure, I am a brand ambassador for Pensionbee, so they pay me. They pay me money each month. But it's a great company where you can just consolidate all your pensions all together in the same pot. And I know something that you'd want to do is I've put all of my pension money, I'm getting close to £100,000 in my pension pot, which I'm very excited about, because like it's all my money. I don't have to share it with anybody. £100,000 in your pension pot, by the way, is not enough if I want to give up my job when I'm 60 or 65 or whatever. Anyway, they've got a fossil fuel free fund, so it just like I've made so many changes in my day-to-day life to be more environmental. It always concerned me that I've got that pension money sat there invested in all these like horrible companies, so now I don't. Yeah, it's very exciting. But yeah, and I just put money into my pension as and when I see fit. I don't have a monthly direct debit. I sort of assess at the end of each month what I've got coming up over the next few months, and if I can afford to chuck a bit into my pension, then I do. And I, at the end of each financial year, I always chuck a load in, because the great thing about pensions and a limited company is it's a business expense, so it reduces your tax bill. So yeah, it's I'm by no means where I need to be, but I'm on the journey. So
what is the amount that people should be aiming for then in the pension fund?
that's a really good question. Do you know, I'm writing an article on that at the moment. How much is enough? And I've asked, say somebody in their 20s, 30s, 40s, 50s, and then I've asked somebody retired how much they all think is enough and where they think they are in the journey. It's really interesting talking to different generations of people. Particularly when you compare the person in the 20s to the person in their 70s, like really older people have had it so much easier. They really have, because property, a lot of the money's come from property, isn't it? And the younger generation can't, it's a struggle to get property. So how much is enough? It depends on so many different things. It depends on, as you say, when you retire, when you stop needing that income to flow in from a job. It depends on your lifestyle. It depends on when you're gonna die, which is always a struggle I have, because like there's always this thing of, what's the point of saving loads and loads of money if I'm going to die the same age as my parents did, which I'm doing everything to not, make that happen, but you just don't know, do you? Yeah. Or I suppose if that happens, then my kids are just going to be very, very rich. Yeah, there's a really great calculator on the Pensionbee website where they've got some sliders where you can put in how much you've got in your pension, what you when you're going to retire. They put an assumed age. I think they put you need that money up to the age of 95. Average age that we'll live to is 85 as women. Men average death age is 83, I think, 84, a bit younger. Yeah, it'll pop out a result. I think I'm aiming for something like £300,000 to £400,000 worth of money. I mean, that's just based on now. Who knows, how my financial situation will change in the future, if I end up with another husband or whatever. But and it also, you can also take state pension into account, because there is state pension you get when you're 67 at the moment. I suspect that age will
go up,
will go up as the population ages. But I mean, that's not to be ignored, because that's something like £9,000 a year, I think, is your pension. So yeah, but but £9,000 a year, that's not enough to live off of, is it? So yeah, pensions, consolidate your pensions into the same pot and figure out how much you've got. And I think that's just the starting point, isn't it, of knowing how much you've got. Because then I remember when I consolidated all of mine, and I think I had like 40 grand's worth of pension money. It's like, okay, I've got a starting point. And I didn't put any money into my pension probably for the first 3 or 4 years of self-employment, because it's money that's locked away for a really long time. And like cash is really important when you run your own business.
Yeah, absolutely.
So yeah, another thing for your list.
Well, it's been on my list. It is on my list. It's rising. It has been on the list for about a year, but it is definitely rising now.
Yeah, cool.
One of the things that help is actually being able to get hold of people at these companies. Not obviously, you could talk to Pensionbee because they'd want to, because they'd want your business, but often getting hold of your people at pension companies or insurance companies or any of these sorts of things can be really, really challenging, in terms of you're sat there on hold for a really long time because they're busy, and could you just check out the website for any information you want? And I feel very frustrated about that, because obviously, time's at a premium, so you're trying to do this in a half an hour that you've got spare, but then half an hour can very easily go by with you being on hold music before you get through to anybody. So I think this, I think there's, when I was also reading up on kind of women in finance, there was a really important point made that the financial industry is intentionally obscure in a lot of how it speaks. And I know that there's a big move to change that, and a number of companies are doing things differently. But they are sort of intentionally obscure and inaccessible, because that's part of the way they're making their money and the gains they're making. But yeah, there we go.
Yeah, so any company that automates that kind of stuff wins big ticks from me. I'm always interested in companies who clever apps and stuff that are intentionally set up to save time and automate things, particularly because I know women are extremely time poor and juggling so many things. Yeah, you wouldn't have to contact all your old pension companies. Pensionbee would do all of that for you.
But yes, agreed. The example is that, ironically, when I went on maternity leave with a company that I was working for a few years ago, my company pension that was set up for me was stopped in that period of time that I wasn't earning any money at all. And then when I returned to work, rather than just starting up again my initial pension pot, they set up a brand new one. So I ended up with
oh my gosh,
from the same company with the same company, same pension company, and actually on and off over the last few years, I have tried every once in a while to just call them and say, can we just put these two together into one pot? And getting through to them has been extraordinarily challenging. But anyway, there we go.
The pension industry is known as being very dinosaur, white male dominated. Which is great that Romy who wrote the foreword in my book. I love that my book is behind you on the
my own book was there as well, but it's currently being referenced, so it's next to my desk. But and Lionheart is a magazine that my story was featured in, so I'm showcasing.
That's amazing. That's so cool. Romy's the CEO of Pensionbee, and she wrote the foreword of my book, which was a very amazing honor. So I just want to also touch very quickly on insurance. Do you have life insurance? You must have life insurance.
I've got life insurance, and I've got business insurance, and I've got I think those are the two main things that I've got.
I don't have business insurance.
Well, so this helps me not worry so much about my fuck off fund, because I have got an insurance that if I was unemployed for ill health or any length of time, as a self-employed person, that I would be able to access money.
Sorry, yes. So I have I've got a thing called income protection insurance, which might be the same as what you've got.
It is.
Yeah. So if I'm ill, if I get some disease that stops me working, that then kicks in, and I think I get something like £2,000 a month, but it's only after 3 months does that kick in. That's actually a really important policy for self-employed people, because we don't get any sick pay, and if we can't work, we're absolutely buggered. I find that product really reassuring to have. Actually, that really helps me sleep a bit better at night. And a will, it's really important to have a will. My dad died without a will, and it created such it was a right mess. Like, all of his estate went into probate, and you remember it. It's just, no money could be pulled out of his estate, and we didn't know how the money was to be split. And then it just falls to the laws of the country, and his surviving spouse got all the money. So everybody write a will and state your but even if somebody asked me a question once and said they don't have any assets, should they still have a will? But I've got things in my will like what should happen. I mean, obviously what should happen to the children, what should happen to my cats, and also like certain possessions I've got that might be worth a bit of money, who possessions should go to. It's not just about what assets you have, it's also about, and I've also got written in my will the wishes for my funeral, so songs I want played, what I want people to wear.
Brilliant.
So wills really, you can do an online will for maybe 70 or 80 quid. It's like super not much money. So
no, absolutely. When I last had a will, and I don't have one at the moment, but again, it's on our hit list of things to resolve. One of the things I had was all my journals and notebooks, and I had and in fact, all my books, I gave my books to different people, but also my journals and notebooks that have lots of stuff in there that I probably wouldn't want everybody reading. I gave to one particular person with an instruction to destroy.
Publish them.
To destroy if I hadn't already done that. So yeah. But
And I was also thinking the other day, what would happen to my business if I died? Which is a really big, because there's quite a chunk of revenue my business earns passively. So even if I wasn't here running it, it would still be generating hundreds, thousands and thousands of pounds a month. So yeah, And it's also like, when in a will, you should appoint an executor, because if you don't appoint an executor, the solicitors can end up doing it, and that costs an absolute fortune. So I have spoken to one of my best friends who's a very organized person who has had to deal with that kind of stuff as well. I've put her as my executor, but that means, and I haven't done this yet, I need to create like a file of like all my information, like all my account numbers, the companies, the companies that my investments are with, my pensions are with, but also it's all to do with my business as well. So it can get quite complicated.
It's not a conversation for now, but people increasingly are having to think about their digital legacy as well, and what to do about that. So one of the things that I have a sort of personal story to go with this, because one of the things that happened not long after my mum died was somebody hacked her Facebook account, which was then quite freaky, because my mum effectively was messaging me. She was messaging me lesbian porn, so it wasn't really standard stuff that she would have been messaging me. But the whole thing was really upsetting, because I then had to contact Facebook to get them to shut her whole account down. There was no way of preserving the account and getting the people that had hacked it knocked off. So definitely. And I think Facebook do that now, don't they? Like, I think you have to assign somebody else. I want to check into that. You have to assign somebody else as a second person on your account.
Do you?
Yeah.
Don't know.
In event of your death. Anyway, there we go.
On that
happy note.
Right. Oh, I reckon we've been talking for about an hour.
Probably.
See, when you talk about money, you can just go on and on. I think we've gone off on a lot of different forks of stories and life, but I think the overarching message is deal with one thing at a time. Like, it sounds like you've got quite a to-do list with your finances, but maybe just try to cross one of them off this year.
It's all in there. And one of the things I've started to do business-wise, because that's the other thing, is finding the time when you have children, particularly young children, is also a little bit challenging. So one of the things I've started to do with the business is to have a day a month that's just admin. So I don't book any meetings in, and I do business related admin, but then also I'm starting to tackle some of my personal admin that doesn't seem to fit in anywhere else in my life as well. So hopefully should get pensions knocked off this month, and start to tackle some of the other things.
Well done. You have to report back.
I will do, absolutely.
Okay, right, let's close it up. So do your bit about that. The music.
So you have been listening to Mrs Mummypenny Talks with Ridley Writes, hosted by myself, Rebecca Megson-Smith, and Lynn Beattie, produced by Lynn Beattie, and podcast music created, composed and performed by Daniel Greensmith. Thank you very much.
Thanks for listening, everyone.
We'll talk to you soon. Take care.
Bye.
Bye-bye. Bye.